Welcome back. I'm here today with Peter Kellner. He's the founder of Richmond Global Compass. Welcome to today's show.
Thank you for having me.
So, Peter, for the listeners, can you give us the background of what brought you up to where you are today? I know you have a real strong educational
Yeah,
foundation.
thank you. So where I am today with Compass, which is a public securities firm incorporating environmental, social, and governance metrics to drive actually a superior return. I can explain that later. And also is trying to help out with the path toward global sustainability by harnessing the broad capital markets. How I got here is a bit of a narrative, but I'll try to keep it brief. I got out of college in the early 90s with a real passion for sustainability. I went to Hungary, Budapest, on a scholarship. My family's actually from Budapest, so I'm first generation. And so I went back there after college and I set up what is today still the most, I think, influential environmental policy group in Central Europe. It's also global. It works with the World Resources Institute and others. So, manifest through that a passion for sustainability. In 1995, I co-founded an organization called Endeavor, which is now in 33 countries across the emerging world, but also now in the United States. That is a sustainability organization in its own right with respect to the job and wealth creation that we pursue. Um, and then, my day job really since the late 90s has been venture capital, seed, and early stage, with some nice investments. And I was able to maintain a family office until around 2014 when I partnered up with a dear friend of mine who'd been my lawyer at K&L Gates. And we started the first institutional venture fund, which is called Richmond Global Ventures. And that firm invests all over the world: Indonesia, Latin America, Europe, Silicon Valley, New York, Los Angeles. Um, and we have a heavy inclination toward data science and financial services. So we are big investors in the largest online lending company in Mexico. It's all pure machine learning. We have a sizable investment in a company called Data Miner, which is um, a national security-esque data science company, shall we say. And then there are a few others. But what's relevant to the Richmond Global Compass discussion, which I assume we're sort of here to talk about a little bit, is that's a public securities investment model. It's actually a multi-asset investment model. So it's a corporate to sovereign asset classes, everything from equities to sovereign debt, commodities, currencies. How I got to that was only because of my venture background in data science and my passion for sustainability. Because back in the early 2000s, as I was beginning to invest in data science, I started to develop a thesis that you could use machine learning in particular to identify those key environmental, social, or governance, what's called ESG metrics that affect financial performance. And there are two forms of context here that matter. One is the state of ESG metrics. It's terrible. They're self-reported, they're non-periodic. It's like financial securities reporting in the 1920s, honestly. So that was one issue. And there are about 3,000 of these metrics out there, but only about 120 are what we call material, or those that affect financial performance. And then of those 120, only about 4 to 6 apply to a given asset, whether it's a corporate or sovereign asset. So you can imagine now, it's like finding a needle in a haystack. And that's where the machine learning comes into play, and identifying those specific alpha driving ESG metrics. Second thing I looked at in terms of my due diligence, because I spent a lot of time thinking about this, is the disequilibrium that exists in the world if you're concerned about sustainability and you believe capital markets are a driver to solve for global challenges, as I do. The fact that 95% of investing in sustainability is in the private sector. And this is great. But it's, venture capital, private equity, project finance, and great respect for folks in that area. I actually invested a bit in that area. Some of that area is called impact, very different from what we do. Impact's an asset class. What we do is a methodology. Um, so that space is 95% of the sustainability investing, but it's less than $1 trillion annually in turnover. Now, if you look at the global capital market turnover, it's 180 trillion, maybe 200 trillion. It's 4% penetrated by public securities investors. So massive disequilibrium if you're thinking about how do we drive change and warding off or pushing back climate change, shall we say. I saw that disequilibrium and I thought that's a great opportunity. I was fortunate enough to meet, because I'm not a portfolio manager for a public securities fund, my partner Encompass, who was a great background at 3G Capital in their macro investing space, and also for Goldman Sachs, and also for a fund in Brazil called the Verde Fund, which very few people have heard about, but it's had, I think, 27% net returns for the last 20 years. And my partner was the right hand to the founder of that firm, Louis Stuberger. So we were able to get together and come up with this, actually design this model. It is the first ever global multi-asset firm that integrates material, again, performance affecting material ESG factors. And what's been proven out is that if you use a materiality lens, you can cull those specific ES or G metrics. You can actually drive significant alpha. In fact, one of our advisory board members, George Serafin of Harvard Business School, published the seminal paper on this, which was just looking at corporate assets, and proved out statistically that you can drive more than 6.02% in accretive alpha if you're using these ES and G metrics. And I thought to myself, well, what if we could pursue this in the multi-asset space, not just corporate? Because if we could open this up to all asset classes in the public markets, wow, that would be gigantic. Not just financially, but it could be a real catalyst for change. And so I did a data science study on my own in 2014.
So, Peter, I need to take a quick break.
Sure.
Running up, we got to, but after we get back, I'd love to continue on about the 2014 launch of the Richmond Global Compass Fund. Visiting here today with Peter Kellner. He is the founder of the Richmond Global Compass. We'll be right back after these messages.
Grandpa, can we do chemistry? Papa, Daddy. Grandpa, let's do something fun.
We'll help you stay organized so you can focus on what really matters in life. Give us a call today and see how we can help you start saving taxes. Welcome back. I'm visiting here today with Peter Kellner. He's the founder of Richmond Global Compass. And the last segment, we're talking about this 2014 study that led to the creation of this joint venture.
Yeah, so it's 2015. It was that was my study I did independently, and what I was able to do, working with a very prominent data science company, is prove out, at least for me, that you could identify material ES and G metrics across all asset classes, not just corporate, which was a pretty stunning discovery for me. Because there was a massive business model embedded in that. If you think about the disequilibrium and opportunity that I just described, right, in terms of the size of global capital markets and the very de minimis penetration by global securities investment firms. So I partnered up with my partner in the hedge fund, and we spent about a year getting things organized, built an institutional grade platform. Really focused on building our machine learning platform out. We did not want to go into the market with hypotheticals. And so We got that built. It was robust enough to start, and still being built every day. We're never going to stop building our machine learning platform. We're learning every day. We launched in June 17, and we've invested literally from Africa to Asia, U.S., Europe, Latin America, again across all equities, sovereign debt, currencies, commodities, what have you, and we're able to apply the ESG material ESG metrics to a number of those asset classes, and we've generated, I believe, some alpha from that. So since 2017 June, we're up almost 19% net of all fees. This year alone, we're almost 8% net of all fees. In October, which was a devastating rout, we were up about 1.3%. And in this month, which is another devastating rout, we're up almost 1%. So I think we have a model here. And if I could just put, sort of a ribbon around it, a bow, I'd say what we have discovered is there is an ability, there's the huge potential to integrate material E, S, or G metrics into your multi-asset analysis, financial analysis. So it's just one more factor in a multi-factor analysis. We're not talking about impact investing, which again, I highly regard as a separate thing. It's an asset class. We're talking about a factor that actually drives performance, information that drives performance. So if you're not looking at this information, you're probably not being a fiduciary. And oh, by the way, it helps generate superior return. So it feels really good. You're out there every day incorporating these metrics that contribute to planetary sustainability to drive a superior return, which is what I really like about this model. And I'm hoping that we can, help spread that gospel and encourage other fund managers to get into this space, because at 4% of a $180 trillion industry annually, we have to really move. And given especially the fact that we're going to be entering a 1.5 degrees Celsius world in less than 17 years, according to that UN report out about 5 weeks ago. Very excited about it. Excellent team. Our entire team is accredited in sustainability. It's not like we have the environmental folks here and the traders here. They're one and the same. We call it Green Alpha. We're about a year and 18 months into it, and very excited. I'm excited about what we're doing.
I'm visiting here today with Peter Kellner. He's the founder of Richmond Global Compass, and I need to take another break. We'll be right back after these messages.
Grandpa, we found the golden stone.
We have to watch out for the treasure guardian.
Oh no, the treasure guardians!
Since you can't take your wealth with you, spend time with your family. Groco, servicing family office needs since 1964.
Welcome back. I'm visiting here today with Peter Kellner. He's the founder of Richmond Global Compass. And Peter, a very unique business model and company that you've been able to put together. But when you're looking at diversification across global asset class, what's the process that you use to see where trading opportunities are, and how do you approach it?
So there's nothing novel about this until we get to the idiosyncratic level, and I'll explain what I mean. We begin with a classic macro view of the world. We look at the big blocks like China, Japan, Europe, the U.S., and we try to figure out what the interest rates are telling us, and that's mostly what the U.S. is doing, right? Everybody responds to the Fed. Once we've figured that out, we're starting to determine what kind of cycle we're in. We start to look at different regions and countries. So the interest rates and the monetary policy that we've been looking at, very traditional macros, now informing us as to where we should be looking. Once we figure out which countries and sectors we should be looking at, that's where we start to apply the ESG materiality, which again, we've developed that whole process through machine learning. And so we're now able to choose corporate equities, or sovereign opportunities where we're applying the ES or G. So it's a very traditional top-down macro approach. At first, no bells and whistles. But once we get to the point where we've figured out where we want to invest and in what particular assets, that's where the ESG comes to play. And that's where we're really looking across assets. So as by way of example, we had a company in our portfolio. We don't have a lot of equities right now, which we got out of, I think, at a good time. We had a great company, a Danish company called Ørsted, which was a former fossil fuels company. And we really liked what they did, which is they transformed themselves into an offshore wind company. And we looked at them using all the material metrics we could derive, and recognized that they were on a very exponential growth curve. And so they are now the largest offshore wind company, I believe, in the North Sea, a major one in Taiwan, which has huge offshore wind energy wind consumption, and working on some RFPs in the United States right now. And so that was a very good example of a corporate equity. When we think about sovereigns, for example, let's say we just want to, we often look at pairs. So let's say we're looking at Egypt and let's say Turkey. Okay. Now, neither country run by a particularly democratic leader, but nonetheless, at least in Turkey, they're quote unquote democratically elected. But Sisi in Egypt is doing different things than Erdogan is doing. So if you look at these countries, Erdogan is packing the government with his family. It's very nepotistic. Women are not allowed into the workforce. There's massive corruption all around. I'm not saying there's none in Egypt, but the central bank is under his control, as is the judiciary, which he's basically neutered. Now you look at Egypt, where you have a reluctant democratic leader in Sisi. But at least in Sisi's case, he's made a commitment where he is moving women into the labor force, which has, by the way, a tremendous impact on productivity, which, by the way, lowers your interest rates. And look at Turkey, their interest rates are skyrocketing. So he's also doing things with children's education, and he's letting the central bank be independent. And by the way, Egypt's central bank is probably one of the best in the world. Amazing Oxford-trained economists. They're very, very good. And the judiciary is kind of so bureaucratic that he can't really make them do anything. So in that case, we found a really interesting short-term yield that we've had on for a long time. That's been a very good investment for us. But we discern that opportunity by looking at ESG metrics in a pair trade kind of context, if you will. And also looking at the region, which if you look at MENA, Middle East, North Africa, Egypt is probably one of the better countries to be looking at versus others.
So what timing considerations should the investors be aware of when considering investing in ESG?
So the question is, when you're using ESG as a factor in a multi-factor investment model, because we're not really investing in ESG, right? That's like impact investing. You're investing for impact. We're investing for return using ESG. The horizon is for us about 3 to 5 years, because you need that. For example, in the equity space, we don't purchase Unilever and Scandinavian bonds. Okay, anybody can go out and do that. But we're looking for our aspiring companies who are on like Ørsted that I mentioned earlier, who are aspiring to be have better governance, better community impact, better environmental impact, et cetera, better supply chain, cleaner carbon footprints, et cetera. So when you look at that, you really can't churn out of your portfolio a lot. And so we have very, very little churn in our portfolio. We have to pivot because of, certain situations. So if you look at January of last year, December 17 into January, there's a massive run up in the market. We got very uncomfortable. So we put in risk stops. We have great risk management on our team. And we pulled basically 80% of our profits off the table, and our principal let 20% run, and then in February you had this massive implosion. So we were able to preserve our P&L, profit and loss statement, and I think had almost a 5% month when everybody was down very, very significantly.
Excellent. So, Peter, for more information on becoming more involved with Richmond Global Compass, how would a person go about that?
So we have a website, RG, like Richmond Global, rgcompass.com, and there's an investor relations link, ir@rgcompass.com, and we're very good at responding. If folks want to get on our distribution and receive our updates, that's where they should go, and or they can reach out, simply directly to us.
Been visiting here today, Peter Kellner. He's the founder of Richmond Global Compass. Thanks for being on today's show.
Thanks for having me.